Hello ladies and gentlemen, welcome to my channel. I hope that you learn, that you grow, and you are subscribed to the channel. If you have not done so, please subscribe now so that you can be able to get this and much more videos. And today I'm going to speak about educational plans that people take with insurance companies. Are they worth it? Some people have gone to the point where they say that they are actually scammed, and many people claim to have their fingers burned from these insurance education plans that they do not actually see the benefit at the end of the day. And today I'm going to debunk on some of the things that make it additionally difficult or problematic to be able to have these education plans. The first thing is educational plan insurance companies and agents have no fiduciary bond. Yes, what do I mean by fiduciary bond? They are not bound legally to be able to help you, uncover you, and protect you financially should an eventual activity actually happen. So they are not looking out for your best interest, and they are legally not bound to look out for your best financial interest. And when they do not have your best interest at heart, and they are not legally bound to look at your financial interest, then what are they looking at? They are looking at their own personal gain from the money that you contribute to. Fiduciary guarantees should be provided for any financial instrument that is marketed to people to be able to better their financial affairs in the future. But without that, then this makes it a questionable instrument that you should be investing in. So no fiduciary guarantee, no fiduciary requirement, then you have a problematic thing to look into. Fiduciary guarantee ensures, for example, if the insurance company fails, then the government is going to look at ways to be able to help you recover some of your money, because again, you are covered by this fiduciary guarantee. And if, for example, there is misappropriation of funds in this organization, then they are legally bound to compensate you because you have put money into this company, and you are bound legally to be able to receive something should there be liquidation of this company. But without a fiduciary guarantee, then probably is like giving money to your friend without any form of agreement, communication, and whatnot. So no fiduciary guarantee, additional risk on your behalf. Of course, the other thing that we need to talk about is a lock-in effect. Why should somebody lock you in an investment and give you no option to back out? Yes, you should not be bound by contracts, especially contracts where you are giving the money, taking all the risk, and you are not allowed to even back out or back down should you have a financial inadequacy or a problem in your financial affairs and can no longer meet this obligation. So this locking effect makes it problematic for many individuals, and more than 60% of the people do not actually get to pay all these amounts of money up to the time that they have signed these agreements. This again is problematic when you are invested in things that you cannot come out to. For example, let me give you an example. If you open a bank account and this bank account starts as free, then they tell you it's free, but you cannot come out of this bank account. Then in the future, they change the terms to start charging amounts and exorbitant amount above the market rate. But you have signed that you cannot get out of this bank account. Is this fair? Is this fair to the person who is providing all the money, all the capital, and undertaking all the risk with no financial fiduciary guarantee on the end of the other person who is receiving this money? I think this makes this contributions quite questionable. Of course, the other thing is the inflexible bind. I can tell you with a surety that all types of contracts should allow for a form of flexibility should terms actually change, and one person cannot be able to meet these obligations, but they assume that you cannot be able to change, and they are quite inflexible. Unfortunately, in addition to this, they put a clause that allows them to alter the terms of their agreement and the contract, but you as a person who is contributing all the money, all the capital, cannot adjust anything or seek redress to be able to address an eventuality that has happened to you in your financial affairs. Why is this? Is this truly a fair contract? Is this truly something you should be looking into? So you're bound, you cannot move. The contract terms are bound and you cannot do anything about it. But the person you're giving your money to can be able to change these terms as they so desire. This is a big issue when you are looking at entering into things that you want to invest in the future, and especially if you're putting them towards the financial future of your children. Of course, the other thing I have a question is, why are there no statements? Why are there no minimum guarantees that you're going to receive a specific amount of money should you opt out of this arrangement? Why is it not guaranteed that you can be able to know how much you have been contributing and the money that you are giving is actually invested in investments that are generating money for this person that you're giving money to? Why are you not given an update or a statement of how your money is going? Again, this becomes like a friendly contract where you give somebody money and there's no agreement and they tell you, I will give you at a specific date, but they do not guarantee anything and they can change the terms on you as they so desire for their contract. So this is again very problematic because you need to at least be able to get a minimum guarantee. At least the rules of equity determine that if I give you money over a period of time, even if you are suffering financial loss, you should at least be able to compensate me a little bit of that money that I have given to you should I be unable to meet that obligation. But this contract is skewed to be able to make you lose all your money should you be unable to contribute this amount of money for a longer period of time. And this has been problematic, especially with coronavirus, where people have lost jobs. Why should you be in an agreement where you cannot be able to get out, and where you have been giving money continuously to people who are investing and making money and investing and making money from the money that you give them, and they are not willing to give you even a little minimum guarantee on the money that you have already contributed? You're not even asking for a profit. You're not even asking for a share of interest that they have gained, but you are asking to be able to get some minimum guarantee to be able to help you in your financial distress. Again, problematic contracts, problematic investment, and what is causing people to call it a scam. The other thing is you are providing all the capital. You are providing all the money that they are using to invest and grow their financial affairs. They are not giving you updates at all, even in statements and anything like that. In fact, they're not even stating categorically that they are using your money to invest and make money. And the other thing is they make all the gains and you are not bound to receive any gain that they have actually received. You are just bound to be given a fixed amount that is actually below even the inflation rate, the prevailing inflation rate in any country. So you give all the capital, you suffer all the risk, you are unable to get out of these contracts, then you are to partake all the risk because the company can fail, and because there is no fiduciary guarantee, you will actually lose all your money. So you take all the risk, you have given all your capital, you take on all the risk, you are unable to come out or change or alter terms of this agreement, and you may lose your money and you have no way of recouping any amount of money. Then the other thing that they usually say is that they are giving you, they have covered you in case of death. They have covered you for the premiums. My question is, if you die, what is most important to your dependents or to your children? Is it that the insurance company will pay premiums towards or amounts towards this agreement that you have, this insurance policy that you have, or is it more important that they pay the school fees that you are not able to pay upon death? In fact, why would they cover to be able to pay the money to themselves so that you can be able to, your dependents who are now out of school because of your death and demise are going to again wait for another 4 years before, say, the insurance policy expires? Again, questionable transactions that many people do not think about and end up calling it a scam. Let us call it for what it is. It has no investment bearing on anyone, it has no financial gain on anyone, and you are better off taking your money and investing in investments that are going to give you much more money and going to help you financially, instead of putting yourself in inflexible conditions, in inflexible contracts, lose all your money in case of any eventuality, and have no fiduciary guarantee should there be a problem with the person that you are giving your money to. Again, all this is information that they do not tell you when you are investing in. They start by telling you, oh, this is an investment towards the education of your children and it's going to help you to pay the school fees of these children, but they are not indicating that it is going to be problematic and is actually making you enter into a bind and a fix that is actually unfair and unequitable to you. I hope that you are learning, you are growing, and you're becoming better. And the next time you think about entering into these educational policy agreements, please remember that it is not always for your own good, and you are better off taking your money and investing on your own, taking the risk that you are otherwise still taking within this insurance policy, and you are bound to get all the money and all the returns from this investment you have done alone. I hope that you are learning, you are growing, and you're becoming better. Next time we are going to debunk the pension schemes. Are they worth it? Are they actually there for your financial well-being, or are they another questionable scheme that is bound to benefit others and not your financial affairs? So thank you and enjoy your day. Remember, comment down below, subscribe to the channel, and leave a like on this video. Thank you and enjoy your day.